You're listening to the Millionacres Podcast. Our mission at Millionacres is to educate and empower investors to make great decisions and achieve real estate investing success. We provide regular content and perspective for everyone, from those just starting out to seasoned pros with decades of experience. At Millionacres, we work every day to help you demystify real estate investing and build real wealth.
I'm Deidre Willard, an editor at Millionacres, and thank you so much for tuning in to the Millionacres Podcast. If you've hung out with me on the podcast before, you've probably noticed I'm a little excited about modular construction and the things that it can bring, although I think my excitement maybe doesn't always come with a lot of knowledge, so I'm bringing in some expertise today. I'm chatting with Nima Wedlake of Thomvest Ventures. Nima's a principal at Thomvest, focusing on investment opportunities kind of all across real estate and financial technology. He currently serves as board observer at LoanSnap, Singular, and Wholesale. He's an expert on fintech and real estate and has this just awesome sense of what's happening in the startup market where all of this innovation is happening. So welcome. Well, I've been thinking about this podcast for a couple of weeks. One of the things I think modular construction is so important is we've got a construction waste problem in the world. How does modular help with that?
Yeah, definitely. There are many problems around real estate development right now that modular can help solve, including the waste problem. And it's a particularly interesting moment in time for modular. I think we are in a bit of a housing crisis around pricing. And, for the last decade plus since the great financial crisis, we've seen this steady increase in pricing of homes, as particularly as rates have gone down in the last 18 months. And it's making it more difficult for folks to purchase a home or purchase their first home in particular. And I think that's creating a swell of demand for new takes on home development and home building. And it's compounded by the fact that the price of materials has skyrocketed in the last year, lumber in particular. And so I think there's in the same way during the post-war period where modular building and construction techniques really were popularized, there was a swell in demand, supply shortages, also unused factories that could be retooled to help with building. I think we're in a similar moment in time now where there's this nice confluence of both demand from on the buyer side, and then also this recognition that there needs to be innovation around the process by which we build homes. And modular has several benefits that I think solve some, obviously not all of the problems that I articulated.
Well, I think that's one of the things that's fascinating is because you're absolutely right. There was that kind of post-war modular boom, and then it kind of disappeared. And it's really odd that you didn't, it sort of fell out of favor. And now you're right. We've got lumber prices are up 200% over April last year, and the lumber memes on Twitter are hilarious. But we've really got this situation where we kind of have to figure it out. Otherwise, there's not going to be a housing affordability at the level that we need.
Yeah, and I think part of the wane in popularity of modular housing, a few decades ago, was due in part to the fact that there was a lot of rigidity associated with the prior approach. Obviously, it was a very different period in terms of adoption of technology and software, and I think we have the benefit now of all those things that help us adopt processes around modularization, creating, breaking down the home building process into a set of components that don't need to occur on site. But we can also leverage software to allow for a degree of customization around the end product, which is, I think, the sweet spot for consumers. They'd love to benefit from the efficiencies associated with a modular building approach, but also want a home that doesn't feel cookie cutter, that feels unique and tailored to their needs, that's considered to be a high quality build. And I think we're in a nice moment where we can achieve all of those things.
It's true. And I think one of the things that I'm watching, perhaps you're watching this too, is that there's so much venture capital money right now. I mean, obviously you're in the business, so you're seeing all of that. It hasn't quite flowed so far to modular in terms of like big companies going public yet. Although, there's been talk, I think, for 3 years about Katera going public. But so what are you seeing as far as that? What do you think there's going to be a big modular company that goes public?
Definitely, and every day we meet with really interesting companies at the early stage that I could see being large, successful public companies in a few years. And in particular, I think there's this renewed interest from the venture capital side around this field. Um, there are a lot of smart people working on the problem now. I think all the the more macro level trends that I articulated earlier are also creating interest on the venture side, um, and I think we're also seeing some of those early companies get to scale, get to nice revenue, grow quickly, and so that's also attracting a variety of entrepreneurs to this really interesting field.
Yeah, absolutely. And I know it's not just with modular, it's not just building the projects themselves. There's also that aspect of managing things. Construction tech, I think, is having a bit of a moment right now, partly because a lot of people learned during the pandemic that, hey, you can manage some of this stuff remotely and you can make decisions where you don't have to be on site. Is that another aspect that you and your team are looking at?
Absolutely, yeah. So, I think you nailed it. I mean, historically, construction, whether it's modular or a more traditional process, there are so many individual parties involved in the process. In building an apartment, often there are over 200 people involved, 30 plus entities associated with the process from start to finish, and it's a massive coordination problem. And that makes it challenging for any one company to really affect change the way we'd hope they could, as we invest in startups. I think that's starting to change. There's this growing recognition. I think COVID definitely helped, but a growing recognition that you can, if everyone is using a common set of tools and a common communication platform, you can solve some of the coordination issues that have beleaguered construction for so long and inhibited it from enjoying some of the productivity gains that even you and I have enjoyed kind of in our respective fields. And so I think COVID definitely taught people out of necessity how to use things like FaceTime for doing inspections, like how to move from paper documentation to more digital forms of documentation. And I think what's happened is everyone's realized, like, hey, this is a better way to do things, and I think it'll stick in a real way post COVID.
Yeah, I think that's fascinating because I think when you think about the construction process, especially on the commercial side, one of the things that's interesting is that the individual teams don't necessarily collaborate in the same things. You don't have your plumbers and your electricians. I mean, they'll be looking at plans, but they may not necessarily be communicating on the same platform, which kind of makes no sense and has always baffled me a little bit. I feel like we're getting closer to teams realizing that, and we're starting to see different technology. What do you think about digital twins and how they can play a role in that?
Yeah, I think that's a super interesting um, development that we're tracking closely. I think a few companies that I've come across that are thinking about digital twins in smart ways. One on the apartment development side, kind of the low rise side, and then another on the single family home side. So the first on the apartment side, a company called Juno, and they're taking a modular approach to construction. And what they've done is by creating a digital twin, um, they can find parties for every aspect of the construction process and then describe to them in a in an effective way what to build, how to build it, and then coordinate on logistics as well. And then on the single family home side, Mosaic's a really interesting model where they're effectively a software enabled or tech enabled general contractor, and they work with the large home builders who are developing hundreds of single family homes on a single tract of land. And by combining the coordination software with the kind of typical roles that a GC plays around hiring different trade workers, they're able to like not only bring software to the development process, but also mandate its utilization. And so we really like those models where you kind of take on the roles and responsibilities associated with the actual development, and then use that to make sure that the software is being utilized effectively.
Interesting. Well, that makes me think a little bit also about some of the companies that are going public via SPAC lately. We've got Latch that's going public. We've got Matterport going public via SPAC. SmartRent was announced recently. What are you thinking about the SPAC craze? I keep hearing, oh, it's dying off, and then another one gets announced. So where and how does that kind of factor into your business since you're on the VC side?
Yeah, I think SPACs have been a fascinating development. It's there are pros and cons to it for sure, but I think in real estate in particular, there are hundreds of really fascinating private companies that are building within real estate and getting to interesting revenue scale. I think Open Door was one of the if I recall correctly, was one of the first real estate focused SPACs to go public. As you mentioned, SmartRent and Latch and others have filed more recently. And I think it gives real estate in particular is an interesting category for SPACs because oftentimes you see these companies with real meaningful revenue, maybe not profitability just yet, but Open Door has gotten to quite impressive scale. I think they purchased something like 19,000 homes last year, and building a nationwide presence. SmartRent, very large business at this point. And what I see SPACs as doing is giving investors of all shapes access to these interesting companies. And oftentimes, I think SPACs, when SPACs fall short, in my opinion, is that they're almost putting the cart before the horse. There are some companies that have zero or de minimis revenue and are going public, and maybe they're trading on kind of the hopes and dreams of future growth. Think 4 or 5 years out, and I think that's when we get into potentially dangerous territory. Whereas on the real estate side, I've been, these are all real businesses that are in most cases north of $100 million in revenue annually, and a path to growth and ultimately profitability. So I'm encouraged by what's happening on the real estate side with the SPAC phenomenon.
I love the distinction you made there because there is that factor that worries me with other SPACs outside of our space, where I feel like sometimes it starts to remind me of previous .com boom and bust cycles where people are investing based on on a really great PowerPoint, and that always makes me kind of nervous.
Yeah, same here.
Yeah, of course. So I know that Thomvest keeps kind of this map of all of the prop tech companies. We'll link to it in the show notes. But can you tell me a little bit about how that came about and how you maintain it?
Sure thing. Yeah, so our firm takes a very vertical specific approach to investing, and that the idea is, hey, as a group, let's get smart on a specific category. Let's build a network in that category, and let's meet with great entrepreneurs building within that category, and hopefully we can leverage some of the work we've done to build expertise to do a better job picking the winners in those given categories. and then helping them become winners. And historically, financial technology, fintech was a large, important vertical for us. And about 2 years ago, we had a discussion internally around potential new verticals that we should enter. And there's a lot of overlap between fintech and real estate, particularly all the work happening on the mortgage side of the real estate sector. And so it was a nice kind of natural transition for us to move into real estate from an investing standpoint. And in order to get smart, we put together this market map. I think it was a good it's a good piece of marketing material, but it's for us as we were creating it, it was a fantastic way to learn about all the innovation happening within every segment of real estate. And for your listeners, the map is there are two maps actually. One is focused on commercial real estate, the other is focused on residential real estate, and across the entire value chain associated with each. We've outlined the most interesting startups, that are operating within the the residential real estate agents life cycle, within mortgage, within property management, etc. And I think each map has over 200 logos on it. So I think it speaks to how much is happening and how many entrepreneurs are focused on this category.
Yeah, absolutely. So you've got a hand in residential, you've got a hand in commercial. What do you think of the pace of innovation in the two sectors? Because I feel like it's a little bit different sometimes. So I'd love to know your take.
Yeah, I mean, residential is interesting, right? Because there are over 6 million home purchases annually, and they're on average, homeowner refinances their property every 7 years. So while the aggregate number of transactions is high, the repeatability of those transactions is relatively low. When I decide to buy a house, maybe I'll look for a mortgage, and I'll remember the Rocket commercial that I saw during the Super Bowl, and go to Rocket, and hope that they give me a good rate. And so I think it's taken longer for residential to get to scale because of that dynamic. It's hard to acquire users at scale. Some of the benefits around technology adoption then become less clear, because so much of your kind of the cost associated with the business is around marketing and customer acquisition. I think commercial real estate is where we saw a lot of innovation earlier, because oftentimes software vendors sell into large owners of office real estate in a given geography, and it's more of a traditional SaaS sale. Like if you look at SmartRent, which just announced its intention to go public via SPAC, they sell kind of a tenant amenity experience into some of the largest operators of multifamily real estate in the U.S. And so it's a recurring business. It's there's kind of this one to many sort of dynamic between the startup and their potential customers. And so I think you've seen a lot of attention and innovation in that space. But for us, we're really excited about residential. We think there's so much room to improve the transaction experience, and for the first time, for the first time in a while, consumers are not going to their bank first for a loan, but going to the internet first, and that creates more of an open opportunity for startups to get their attention.
Yeah, it's true. And I think for the publicly traded companies, what I'm seeing is everyone's trying to get to that, what I call nose to tail experience of like from the mortgage to all the way to closing, because there wasn't a platform for that. Your appraiser and your inspector and your mortgage, everything was always separate, and it was anyone who's bought a house knows it's a giant paper chase from hell for that traditionally. It's getting better, still not getting any faster mostly, but I feel like there is potential for that. Obviously, the biggest publicly traded companies are working on it, but there are also all of these small players as well. So is that part of what you're tracking?
Yeah, absolutely. I think the like we discussed on the construction side of things, I would say less of a hairy problem than what we see in construction, but definitely the process of buying a home is a multi-party process. There's the agents on both the buyer side and the seller side. There's the loan officer. There's the title company. There's further down the chain the moving company. Thinking about how you furnish your place, how you do renovation on your place if needed, it's this massive coordination problem. And we love businesses that are trying to abstract away some of the complexity associated with that. One of our first investments on the mortgage tech side was a company called Blend, and Blend sells software into financial institutions that allows them to deliver a great digital experience for their borrowers who are applying for mortgages. So they started at the front of the process where they collect your personal information, your bank statements, your income data, your details around the property that you'd like to purchase, and they power that experience on behalf of banks. Now they're in a really interesting position to offer the full suite of products and services associated with buying your home in addition to the mortgage. So Blend recently announced that they acquired a title company from Mr. Cooper. They have an embedded home insurance agency that allows you to, in one click, get a home insurance policy as you're going through the mortgage application workflow. In many cases, if you don't have a real estate agent yet, they'll connect you with one, and they'll even connect you with moving companies to help you on the day of your move. So they have this really ambitious goal of creating a seamless home purchase experience, and they're well on their way to doing so.
And they just announced that they're going public, right?
They did, yeah. Well, they filed confidentially with the SEC. So I think it'll be another great win for the real estate tech community.
So for you on the VC side, when you're investing in companies, are you looking for companies that have that potential to go public, or are you sort of more imagining that maybe they'll be private for a while? How does that factor into how you invest?
Yeah, I mean, we definitely think about what happens 5, 6, 7 years down the road. Does this business have the potential to be a large, growing public company? But I would also say that we're open to companies that have a potentially different or longer journey ahead of them. One of the benefits of working in venture capital is that you don't need to generate a return tomorrow. It's kind of it's accepted that companies may take many years to fully realize their vision, and I think that's particularly true in real estate, where there are so many parts of the process. There are so many, established ways of doing things, and sometimes it takes real time and effort to change such a large but stubborn industry.
Yeah, absolutely. All right, let's take a quick break here.
Like what you're hearing? Get more real estate investing news and advice from Millionacres on Instagram @Millionacres and on Twitter @Millionacres_co.
Did you know that only 1% of day traders actually turn a profit? So why are many of us mistaking picking stocks for serious investing? How do billionaires like Bill Gates and Jeff Bezos control their risk? They invest in blue chip art. Contemporary art prices outperform the S&P 500 by 174% since 1995. Masterworks.io is the only platform that lets you invest in paintings by artists like Picasso and Basquiat at a fraction of the entry cost. It's no wonder 84% of the ultra-wealthy collect art. Masterworks.io is making art investing accessible to everyone, not just billionaires and CEOs. Similar to real estate, art shares some of the lowest correlation to public equities, providing a way to protect your portfolio from market volatility. Masterworks.io recently sold their first painting, a Banksy work, for a 32% annualized return. With results like these, It's no wonder 86% of wealth managers recommend investing in art. Million Acres listeners can visit masterworks.io today to skip the 20,000 person waitlist. See important information at masterworks.io/disclaimer.
I'm back with Nima Wedlake of Thomvest Ventures, and we're diving into the future of real estate. One aspect we haven't talked about yet is real estate crowdfunding. I'm currently working on a book on real estate crowdfunding. I really see that I feel like we're at the very beginning of what it can do. I always liken it to REITs in the 1960s. I know that Thomvest invested in Pier Street, and I want to know your thoughts on real estate crowdfunding in general.
Yeah, it's a fascinating category. I'm glad you're writing a book on it. I'll eagerly awaiting reading that one. Um, as you mentioned, we're investors in Pier Street, and Pier Street gives investors access to real estate debt. So they're focused on the what they describe as the bridge loan or fix and flip loan segment of the market, where real estate investors are borrowing capital for a short period of time to fund renovation on a property before they list it for sale. And it's a fantastic loan product because it's backed by the underlying real estate. The duration of the loan is relatively short, typically less than a year, and then the interest rate is higher than what you'd see for a kind of a 30-year conforming loan. So it's in the high single digits typically. And they've done a fantastic job unlocking that asset class for retail investors. But we see so many other takes on how on marketplaces that are exposing the real estate asset class to everyday investors. And I think that's an important thing to do because the home ownership rate has been fairly stubborn at, I believe, the low 60% rate, and it's getting harder and harder every day to purchase a home, for yourself, let alone as an investment property. And so we see this full spectrum of options that are being made available to investors, whether that be buy a property outright on a platform like Roofstock, where they'll kind of guide you through the buying process, and typically they'll point you towards investment properties in lower cost markets, so you don't need $100,000 just to make a down payment, all the way through to folks that are taking an asset, slicing it into individual tranches, and then securitizing that asset and making it available to retail investors, so you can actually get exposure to the equity associated with a property. So we really like what's happening in the category. I think we're actively looking for other businesses that are tapping into crowdfunding markets, and we think that over time this will be a great way for individual investors to get exposure to investment properties without having to do all the work associated with buying a portfolio of investment properties.
Yeah, I love that too. One of the things I really like is that I think a lot of people are sort of realizing now that investing in real estate doesn't necessarily have to start with I have a down payment and I buy a house. That maybe that's actually real estate. Your house isn't necessarily a great real estate investment. It's where you live. That's sort of different. I wanted to talk a little bit about your writing on Medium. I've seen some of it. You have some opinions on iBuyers. I've got some opinions on iBuyers. You mentioned Open Door earlier. What are you thinking about iBuying right now? We're in this crazy real estate market.
Yeah, no, it's interesting. I think iBuying was a Open Door from the beginning. It was a business that fascinated me. I think we've talked about some of the complexity associated with buying a home or selling a home, and Open Door came up with a clever way to abstract away all of that complexity just by buying a property outright with an all cash offer, and managing everything else associated with the process. And I think that's one way to do it. It's a very heavy quote unquote way to do it. It's, they needed to raise a lot of capital. There's this massive um, oper- operations component to buying that much real estate at the scale that they're purchasing at. Um, and then I also think those businesses are subject to changes in the macro conditions in the market. I think if you look at Open Doors business between 2019 and 2020, their revenue dropped by north of 40%, and that was just a function of COVID. And now we're in a housing market where that's kind of swung the other way, where things are so hot that you really have to wonder, as a prospective home seller, does it make sense to sell my property at a discount to this intermediary that is Open Door, or do I list my home on the open market and see if I can sell the property at a premium to where comps are coming in at. And so I think there's this sweet spot in which the Open Door model really works, but I think right now we're in a bit of a frenetic environment, and I think the value prop of all buyers, including Open Door, is probably less strong than it was historically.
Oh, yeah, absolutely. And it's interesting too because you've got Redfin is in this space, Zillow is in this space, OfferPad is going public soon. And yet the profitability isn't there yet. No one's gotten to that place where iBuying is profitable. So, it's a question, and also we haven't really gone through a full down market with iBuying. We went through whatever that was last March and April, where everybody's kind of stopped iBuying. But that wasn't like a real down market. That was just a weird thing. So do you think it's possible for iBuying to be profitable? And what do you think it's going to take for that to happen?
Yeah, I do, and I touch on this a little bit in the blog post. I think if we fast forward 3 or 4 years, Zillow is building its iBuying muscle, as is Redfin, and I think simultaneously Open Door is building its muscle as more than an iBuyer. It's they've stood up a mortgage team. They have a brokerage business now. They have the title company in house as well, and so I think the path to profitability is not in the core iBuying business, but in being I would say, more generic real estate or home buying and selling platform, whichever flavor you want to take on. So if you want to sell your home at a discount to Open Door directly, you can. If you want to get connected with an Open Door employed agent to sell your property at more of a market price, you can. If you're looking to buy a new property and you need a mortgage, you can get that through Open Door. I think they've built this great national presence, but now the path to profitability is in layering on additional products and services beyond iBuying. And we're seeing the same thing with Zillow too. They've kind of captured the eyeballs through the portal product, and now they're layering on mortgage, iBuying. They're getting more sophisticated around how they connect buyers to realtors and capturing the value associated with that. They have a title business, and then they're also going deeper onto the renter side as well. So I think that's what you'll see. It's a one-stop shop, and it's about acquiring customers as high up in the funnel as possible, and that's ultimately why I think Zillow has a structural advantage in this space.
The traffic cannot be denied as a core advantage with Zillow. Let's also talk about Compass and that IPO, because I find Compass and some of the other newer brokerages in the space really interesting, because there's this, maybe you disagree, I don't know, this divide between what is considered a tech-enabled real estate brokerage versus a traditional real estate brokerage. And I'm seeing there's a difference in valuation. Are you noticing that?
Yeah, definitely. I mean, I think oftentimes how public company valuations are impacted by the growth rate of the underlying business that's being valued. And so I think in the Compass case, where you see this delta between where Compass has been valued at relative to where some of their competitors like Realogy or Remax are being valued at, I think that's a byproduct of growth rate more than anything else. The company, there were definitely concerns that were shared by public market investors around the profitability or lack thereof of Compass, the amount of capital that they've had to deploy in order to acquire agents, and just kind of grow the core business. So I think the big test for them will be, can they continue retaining and growing their base of principal agents without utilizing these expensive acquisitions that, this arguably expensive acquisitions that they've taken on, to bring those folks into the fold. And I think the jury's still out on that. And you saw the price, the offering price kind of revised downwards in the days leading up to the public offering, and my hunch is that was a byproduct of that unknown around agent acquisition.
Not just agent acquisition, also tech acquisition. They just acquired Glide, which is sort of part of what eases the transaction. They acquired contactually. They've acquired a bunch of different companies, a bunch of different tech, and they've also acquired a bunch of individual agents and individual brokerages. My concern about Compass, sort of as an investor, is how are they going to be able to put all of these disparate pieces together, because they're buying cultures in the case of the real estate brokerages, and they're buying, a bunch of real estate platforms and services that kind of need to talk to each other. What do you think about that challenge and kind of that method of growing a business by acquisition versus internal development?
Yeah, and actually Glide was a Thomvest portfolio company. So we
Oh,
were,
really?
yeah, we were very, very happy to see them working with Compass.
Can you explain for us more about what Glide does?
Yeah, so Glide is a really interesting business. They have a suite of products that allow agents, particularly that are representing sellers, prepare their properties for listing. So in California, in particular, there are many disclosures that need to be completed before listing a property. Glides turn that from what was previously a paper-based process to one that's done completely digitally, and about a third of homes in California use Glide for their disclosures. And then they've also built a great platform where agents can submit offers on properties. So instead of, again, filling out a PDF with offer details, you can submit and then emailing it to the agent on the other side of the transaction. You can submit the offers electronically using Glide, and then a seller's agent can review the set of offers, where these days it's 10 plus for every property, and do so in a kind of on a single pane of glass, and then coordinate or communicate with agents, that rise to the top of the offer stack. Yeah, and so back to your question on Compass. I think from acquiring technology, you can make it work around buying kind of disparate products and integrating them together. I think the war for engineering talent is so strong these days that I think large public companies use their balance sheet and use their corp dev team as almost an extension of their recruiting team. And it's a great way to bring talented people into the fold. And I, as long as there's a strong culture around post-acquisition integration, I think you can make it work at scale, and I believe that'll be the case with Glide. And I will say too, I think there are questions around the Compass agent acquisition strategy, but I've heard nothing but great feedback from agents who are on Compass around the actual technology platform that they use. The this is more qualitative in nature, but I remember attending an Inman conference a few years ago, and the um, the one panel or session at the conference that had the most buzz and interest and had people, pushing their way in was when Compass was demoing their platform, and I think that was a byproduct of just the recognition amongst agents that, you know, everything I do is done digitally these days. I need better tooling to manage client relationships, manage relationships with my brokerage, prepare homes for listing, market those homes, and Compass at least aspires to provide that platform for them.
Well, I think it's interesting too because Compass, they bought Contactually, which a friend of mine was part of that, and then you talked about like Remax earlier. They bought Bouge, another company that sort of has a CRM program. So you see a lot of these real estate brokerages seeing what some of the startups are doing and trying to either acquire or learn how to build in house. There's just a lot of activity around that.
Yeah, yeah, definitely.
I wanted to ask you, as a VC, like, what do you look for in a real estate company? How are you kind of separating out, the ones with a really great PowerPoint that we talked about before versus something that's really investable?
Yeah, I mean that's the hardest part of the job. I wish I could invest in every company I meet with. Typically, we look for a few characteristics. One is a company that's pursuing a really large market opportunity. So one kind of heuristic we use to evaluate companies is, have they articulated a clear path to reaching $100 million in annual revenue, and also growing post that. Is there a big company to be built here? That's kind of question number one. Question number two is, is this the team that will take take the business to that level? And typically, how we make that evaluation is we try to get an understanding of their background. I think just sometimes when you meet with folks and you get a sense of how they articulate the vision and the plan associated with achieving that vision. I think that can be quite helpful in making that sort of determination. And then we look at the competitive landscape often. We want to get a sense of, is this going to be are there 15 other companies doing the exact same thing, which tend to make things more difficult, both whether that be customer acquisition, whether that be hiring talented folks, whether that be, finding a buyer eventually, or going public. I think we like markets that are where there's some sort of structural advantage that the company we're looking at has, and it makes it easier for them to execute on that core vision.
Great, thank you. So I want to ask about the whole Silicon Valley VC thing. It seems like before the idea was you had to sort of go either be in Silicon Valley or go there in order to kind of attract venture capital. Doesn't seem to be as much the case anymore, but there's still a lot of investment in Silicon Valley. Still a lot of, I don't believe that it's going away. What are you seeing as someone who's kind of closer to that?
Yeah, I mean, I think this is really one of the COVID silver linings, is that, when flashback to a year ago, and I was in shelter in place. We were kind of just kicking off shelter in place, and I wondered out loud, can we even invest in when we can't physically meet with people? Is that even possible? And I think as an industry, we quickly migrated to Zoom as a means of communicate, as did everyone else, but as a means of meeting with companies, meeting with team members across those companies, doing running a true diligence process, all conducted online and digitally. And it's been this like I said, like this really interesting silver lining, because it's opened the aperture of companies we can meet with. In a single day, I can meet with a company, an entrepreneur that's based in San Francisco, but then also one that's based in Chicago and New York and Mexico City and Toronto. And I think that creates an enormous amount of opportunity for entrepreneurs in those respective markets who historically may have felt the need to relocate to the Bay Area. And for a lot of people, that's not an easy thing to do, just given the crazy cost of living here. And so I'm super optimistic about the future of entrepreneurship everywhere, not just in the Bay Area. And I think most VCs have adapted to this kind of new normal around we'll invest anywhere. There are kind of no geographic constraints to who we can meet with and where we can invest.
As someone who lives in the Bay Area, are you planning to leave? I mean, a lot of people have, started to look elsewhere. What are you feeling?
Yeah, I mean, I'm Bay Area born and raised, so I have roots here that I think will keep me in the Bay Area for the time being. I think our relationship with our office is going to change for sure. We don't have to recruit people that want to live in San Francisco or call the Bay Area home. And again, just like it comes to investing in companies, I think that's a good thing because it opens the floodgates around finding talented people detached from the location they happen to be in.
I'm sort of fascinated about tokenization and, blockchain. I think maybe 3 or 4 years ago, it started to become a thing. We first saw like the first tokenized properties. Didn't really go too far between a couple of test cases. Now it seems to be back again, bigger. What do you think about it?
Yeah, we're in a really interesting moment when it comes to crypto, tokenization, decentralized finance. There is a tremendous amount of interest in the category and a willingness, I would say, to try new models that have a more crypto based approach to them. I would love to find a company that's like generating real traction on the real estate side of things. Unfortunately, I haven't found that sort of business yet, and I think there are some elements of real estate that make it difficult. Just like kind of the physical nature of real estate, obviously, and kind of the operational intensity associated with it, make it challenging. And we even saw this in fintech. In many ways, the mortgage was the last product to get digitized. And that mirrors closely with our investment history. We started investing in online lending in 2010. First investment was Lending Club. That was a simple personal loan that was being originated online. And it took another decade until we saw the same trends in real estate and mortgage. I think it'll be a similar journey in decentralized finance and crypto as it pertains to financial services. I think we'll see DeFi being this really interesting way to connect borrowers with lenders in a way that is a more direct connection sans intermediaries. And I think it'll just take time for the same sort of dynamic to occur in real estate, just because it's a super heterogeneous, operationally intensive asset class that takes time to digitize, unfortunately.
Yeah, absolutely. Well, thank you so much for your time today. Reminder to listeners, you can learn more about Thomvest Ventures at thomvest.com. Remember, you can always email us at media@millionacres.com to share your thoughts or call our new voice line at 844-615-2201 to be part of the show. Stay well and stay invested.
Thank you for tuning in to the Millionacres Podcast. I hope you liked today's show. If you enjoyed this episode, please consider subscribing through your favorite podcast provider. If you have any questions, please feel free to drop us a line at help@millionacres.com. Stay well and stay invested. People on this program may have an interest in the deals, offerings, or services they discuss that Millionacres or the Motley Fool may have a formal recommendation for or against. Always consult a certified tax professional before acting on tax advice, and do not buy or sell assets based solely on what you hear.